It goes without saying that investing in altcoins is extremely risky. However, altcoins also have huge potential upside. We're talking 20, 30, 100x returns. So you may want to spend a small portion of your investment portfolio investing in altcoins. But if that's the case, how do you then minimize your downside risk? Because let's face it, most of the altcoins out there will eventually go to zero. They're not going to be any good. So how can you minimize your downside risk if you're investing in altcoins? Hey guys, my name's Ryan from tryingcrypto.com, making crypto easy. And we are going to be looking at how you can minimize your downside risk today. So the first way to do it is the simplest one, and that is to do your own research. A lot of people investing in these altcoins are investing in hype. They're just looking at market trends or what people on YouTube are saying and investing in them. And I have done that myself, and I have lost money myself and been a part of that. But I've since learned from that experience. So you want to do your research into the technology behind the altcoin, and you want to see if that technology actually has any use in the real world. And if it does, then obviously it's got a greater chance of succeeding if people actually use it. If it doesn't, then it's got less chance of succeeding. It's just going to go up and then become irrelevant over time. So do your research into the technology, do your research into the team behind the coin as well. Most of the research out there that people are doing is pretty poor, which obviously increases your risk. So the more research you can do and the better you understand the technology, the less risk you'll have because you'll only invest in things that you truly believe in. It goes without saying that this entire video should not be considered as investment advice. This is for general educational purposes only. When you're going out there, as I said, do your own research, get accredited financial advice before investing in this sort of stuff. But yeah, do your own research, make your own decisions. Don't make decisions based on what I say. That's me covering myself. Okay, so that was step number one, or the first thing to do is to do your research. The second thing to do is to avoid pump and dump coins or pump and dump situations. So let me show you what I mean by that if you haven't heard of pump and dump before. So pump and dump is where you have a coin that it's kind of just ticking along, doing nothing, and then all of a sudden these big whales and people with a lot of money come into the market and push the price up of that coin, and then as the price goes up, they then sell their large shares of that coin, which causes it to go down. So as it goes up, people are buying, and then as it's up, the whales then sell for a profit, and then everyone else loses money. So this is something that happens in the crypto space a lot, and so you do need to be very careful. I think this is actually regulated in terms of stocks, but I don't think pump and dump is regulated in cryptocurrency at the moment. So let's have a look at Patcoin, which is one that was hyped recently, which looks to me a lot like a pump and dump. We can see that this coin just kind of trickles along, basically worth nothing for over a year, basically. And then in January, we just see this huge hype around this coin, and we see it move up, and we see it go up massively, and then we see it drop off massively as well as people sell off, and then the market is continuing to go down at the moment. So the whales get in around here. As you can see, the price going up, they get in low. Everyone jumps on the bandwagon, gets the hype, buys all the coins, pushes the price up, and then up here, the whales start to sell and make their money, and then everyone is left holding a coin that's worth half of what they paid for it. And so this is called pump and dump. Most of the time you are going to lose your money in these situations. If you see these huge spikes, then be very careful, tread very, very carefully. It can be risky to buy on what they call ATH or all-time high, because often you'll see coins go all the way up and then have a correction. Even if we look at Bitcoin at the moment, that's kind of done the same thing recently. Obviously, there's a bunch of factors that go into how this happens. But yeah, all-time high. If you're buying at all-time high, then it's risky. So let's have a look at the last 3 months of Bitcoin. So you can see that it's gone up, and then it hit kind of like an all-time high around here, and is then kind of having a correction. So if you purchase at the all-time high of around $20,000 in US, then now it's down around like the $14,000 mark. So, you know, you've lost a good chunk of change, about 30% in just a 1 month period there after the correction. So be careful with that. I don't think Bitcoin's a pump and dump. There's obviously larger market forces at play here, but just wanted to let you know about that all-time high. The next way to lower your risk is something that I really want to show you how to do that I only learnt about recently, and that is setting stop losses. So when you purchase an altcoin, you set a stop loss. So if the coin drops, then it automatically will sell your coin for you. So let's say I purchase a coin for $1 and I don't want to lose more than 20% of my money. So I set a stop loss that if the coin drops to 80 cents, then the system will go ahead and sell that coin for 80 cents. I will lose 20%, but I'll get my money back. So that's what we're going to do. And I'm going to do that on a coin called Stellar, which is a coin that I would like to get into, like to buy a bit of, learn more about. As you can see, this coin has gone up very significantly recently. It has had a bit of a correction. It may continue to go down. It might be a bit high at the moment, but I'm just going to buy a little bit just so I can show you guys how to do this. And if my stop loss does get activated, then I will show you that in a future video. So I'm going to head over to Binance, which is one of the exchanges where you can do this and you can set stop losses. Not all exchanges do this. For example, I also use Qcoin. They don't allow you to do this. So make sure that you can do this on your exchange. But Binance, you definitely can. If you're not signed up for Binance, I do have a referral link in the description down below. If you sign up through that, it doesn't cost you any extra, but I do make a little bit. So thank you if you go ahead and do that. So let's go on Binance. Let's go ahead to the exchange and we're going to trade some Stellar for some Ethereum. So let's put in the code for Stellar, which is XLM, and we can see the Stellar here. So what we're going to do is we're going to buy some of this coin. We can see the price of $0.58 at the moment. What we want to do is go ahead and buy some of these. The minimum you can spend is 0.02 Ether. So let's just go ahead and spend that minimum. I'll buy 101, so I'll have over 100 after they take my fees out. All right, so we're just going to make that a bit cheaper and we will buy some XLM. That buy order is now open. I'll come back once it has completed. Okay, so that's now completed. If I go to my funds, you can see that I have 100 and a little bit Stellar lumens there. Okay, so I'm now going to go ahead and set my stop loss. So this is to protect me in case the Stellar lumens go down more than 20%. All right, but it's a little bit different to the way that you would do this in the stock market. Ideally, I would like to set it currently at 58 cents. If it goes down 20%, so about 10 cents down to about 48 cents, then I would want that to activate. However, you can't set a stop loss based on US dollars or any fiat currency for that matter. You have to set a stop loss against another cryptocurrency, that being either Bitcoin or Ether. So this is more confusing and more risky because obviously if you've got the Stellar and you've got the Ether and the amount you paid for it, if Ether goes up, then your stop loss on Stellar could be activated because it's now worth less Ether, even though Stellar is still sitting at 58 cents. So you kind of have to watch this. It's not something that's just automatically going to happen because if the currency that you're comparing it to goes up significantly, your stop loss could get activated even if your altcoin hasn't gone down. So it gets a bit confusing there. So you do need to watch it and you do need to be careful. But we're going to go ahead and set our stop loss. I'm going to set our stop loss against Bitcoin in this case. So let's have a look at XLM versus Bitcoin. Currently the price is 0.57. We paid 0.58. So 20% loss would put us at 46.4 cents. So how many Bitcoin is that? 46.4. It is 0.403229. At the moment, it's trading at 404336. And so we want to set our stop loss for 3229. So let's go ahead and do that. As you can see here, there's this stop limit tab. So let's go ahead and click on that. And we want to sell our XLM and create a stop limit. So you've got three criteria here. You've got your stop. So this is when the buy or the sell order will be activated. So if the market drops to a certain price, or you can do it if it rises to a certain price, then this stop limit will be activated. If it doesn't drop to that price, it won't be activated. It'll just stay on hold. So four zeros, and then it was 3229. 3229. Okay, so at this point, if the currency drops to this price, then I will automatically try and sell at that price. But what I'm going to do is I'm going to just raise this up a little bit and make it 3250. So if it drops to 3250, I'll put a sell order in for a little bit lower. And I'm going to go ahead and put the amount of 100 there. You can also do just 25% of your portfolio, 50%, 75, 100, depending on your risk and how much you want to hold. So let's go ahead and click sell. So it's just telling us if the last price drops to or below this amount of Bitcoin, in order to sell at this price will be placed. So we'll go ahead and click yes. That has now succeeded. And we can see in our open orders right here, just zoom in, we've got our XLM to Bitcoin. This is the price that we're going to sell at, and we can see that it's currently activated and it's got a trigger condition. If it goes below or equal to this amount, then that sell order will be open. And so that's how you set a stop loss. So if the market goes down on Stellar by more than 20% compared to Bitcoin, then that will be activated. Now I do need to monitor Bitcoin because the fluctuations of Bitcoin can affect this. So if we look at Bitcoin at the moment, obviously it's going up and down every day. So if it goes up significantly, then the amount of Stellars you can buy per Bitcoin will drop, and that could get activated even if Stellar doesn't drop below that 46-cent mark. So I'm gonna have to keep adjusting this as Bitcoin fluctuates, but that is how to set a stop limit on an altcoin and how to minimize your losses there as well. So if the altcoin does plummet, if it's like a pack coin and there's a pump and dump and then it starts to plummet, you can set a stop limit, and so then you can sell out on the way down and you lose a bit, but hopefully you don't lose too much. So I hope that's been helpful, helping you understand how to minimize your risk when investing in altcoins. Obviously, it still remains completely risky. There's always the chance that it can drop 20%, activate your sell order, you sell, and then it skyrockets and goes to the moon. So that can always happen as well. So there's risk there. There's a lot of risk when investing in altcoins. So always do your own research and make your own decisions. So this was not financial advice. I'm just showing you guys how to do this stuff. So this is what I'm doing now, setting some stop limits on the altcoins that I buy. So if they do drop, then I can sell out and not lose too much. And if they do go up, then I can reassess and I can change those stop losses and I can raise them up. So if the price doubles from 58 cents and goes up to $1.16, I can then delete my stop loss and I can change it from that 46 cents. I can change it now up to $1. So let's say the market then drops below $1. My Stellar Lumens will sell at $1 and then I've still made a profit. Okay, so you can change this constantly. You have to stay on the ball, stay on the market, especially looking at that comparison coin that you're comparing it to and how that's affecting the price. So it is a bit tricky to do this, but I think it's worth it, and it's up to you whether you think it's worth it as well. So do your research. Okay, make sure you go out there, do your research, avoid those pump and dump situations. You can really get caught in those, and set your stop losses so you minimize your risk if the coin plummets and if there's downside there. Thanks so much for watching, guys. Don't forget to like and subscribe to this channel as we're doing lots and lots of crypto tutorials. Go ahead, check out one of my other videos as well. Keep educating yourself, keep learning to minimize your risk. This space is fluctuating so much at the moment. Best of luck out there, guys.